This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant ratings service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
Holiday hangover. Investors return from Thanksgiving minus the holiday spirit. Selling off late and snapping the Dow's record streak of all-time closing highs at 5. Black Friday frenzy. Retailers open earlier and customers didn't disappoint, snapping up big-ticket items. But is the best still to come? And big name hunting. Our market monitor has some well-known stocks he says could get you up to 10% in the next year. All that and more for this November 29th edition of Nightly Business Report. Good evening, everyone, and I hope your Thanksgiving was a great one. Susie is off tonight. She'll rejoin us on Monday. Well, it may have been Black Friday at the malls, but on Wall Street, you could have called it Flat Friday. Trading was light with the markets closing at 1 p.m. Eastern Time and the major stock indexes ending the day mixed. But Wall Street wraps up an historic month of November with 12 record high closings for the Dow. And the Dow and the S&P finished this month with their 8th straight week of gains. Today, stocks faded just before the early closing time, but earlier in the day, the Dow and the S&P and the Dow Transports and the Russell 2000 all hit record highs. Here's a look at today's closing numbers. The Dow 11 points lower, the Nasdaq though up 15, now solidly above that 4,000 mark, and the S&P basically flat, down about 1.5. But for the month of November, look at this. Blue chip Dow soaring 3.5%. The Nasdaq was up 3.6%, and the S&P 500 up 2.8%. A good month all around. Well, while shoppers flocked to stores on this Black Friday and many more headed out on the Thanksgiving holiday, the early word is that the season has started out quite strongly. Shares of many of the major retailers started strongly today, but then they faded like the rest of the market. The one standout, Best Buy, adding more than 2% on the day. Courtney Reagan is in Dayton, Ohio, where she had a front row seat for all the Black Friday goings on. Courtney, let's start with how strong overall the traffic has been where you are.
Yeah, I have to say, Tyler, that the traffic has been pretty strong. I'm pleasantly surprised by what I saw. It seems as if we saw a lot of traffic flow at those big box retailers on Thursday afternoon and early evening. And by big box, I'm talking about Walmart, Target, Best Buy, the ones that had those doorbuster specials, a lot of focus on electronics there. Then we did see a lull, I'll admit it, overnight in some pre-dawn hours because of those Thanksgiving hours. I think folks opted not to get up at 5 a.m. for Black Friday, but as the day has worn on, I gotta say, traffic has really picked up here in Dayton, Ohio at the mall. I think retailers will probably end up being quite pleased.
Who are the sinners so far?
If we think about the winners so far, at least from what I'm hearing from analysts around the country, as well as what's really matching here today anecdotally, it seems like Macy's is by far and away one of the winners. They had some really nice doorbuster deals on some strong brand names. Terry Lundgren said there were 15,000 folks, he's the CEO of Macy's, lined up outside that flagship store. Lots of bags coming out with the Macy's logos on them. Walmart also likely a winner. They're saying they are having their best Black Friday in history so far. We don't know the exact numbers, but sounding very promising there. Losers, Sears and Kmart. Kmart actually opened at 6 a.m. on Thanksgiving Day. Doesn't really seem that it attracted many shoppers, though.
Quick thought on online shopping. What are you hearing there?
IBM says that Thanksgiving Day sales online up 20%. Department stores very strong online. They're a standout, up 60% sale number-wise from what we saw last year. Apparel, one of the strongest categories online. So far, it looks like we're seeing decent traffic on the computer as well as here in the stores.
Bring me back one of those wonderful killer brownies from out there in Dayton, will you?
I will do it.
All right.
I will do it for sure.
All right, have a great weekend, Courtney Reagan reporting. But it was not all smooth sailing in Thursday night's shopping frenzy. A fight broke out in a Walmart in Elkin, North Carolina, apparently over discounted flat-screen televisions. Look at that. Similar incidents have also been reported elsewhere around the country. And at 1,500 Walmart stores across the nation, protests were planned by workers' rights groups, unions, and Walmart employees demanding higher wages, more full-time positions, and better working conditions. At this Chicago Walmart, 10 protesters were arrested after scuffling with police. Only 2 of them were actual Walmart workers. With sales off to a strong start this holiday weekend, experts are predicting a very merry holiday shopping season for stores. The National Retail Federation predicts $602 billion in total consumer spending in the final 2 months of the year, the official time of the holiday season. That's a nearly 4% increase from last year.
We're predicting 3.9% growth, so we think it's going to be a very strong season. Historically, for the last 10 years, the average has been about 3.5%, so we're going to do better than that. But we're not back to that pre-recession number of high single digits, 6%, 7%, 8%. And a lot of that is due to the fact that you've got these somewhat hollow indices. So we look at the stock market, we look at interest rates, we look at housing prices, and that would seem to indicate a robust, a growing, a healthy economy. But for many consumers, they don't feel that way.
Well, joining us now to talk more about the holiday retail season and Small Business Saturday, which is tomorrow, is Ed Gilligan. He's the president at American Express. Mr. Gilligan, welcome. Good to have you with us. Thank you seeing what the individual from the National Retail Federation just reported, and that is that receipts are going to be up by about 4%?
Well, you know, we did a lot of research leading into this holiday shopping season, and it was clear to us that consumers are planning to spend more this holiday season than last year. 3, 4, 5% gains certainly seem possible. So we're cautiously optimistic that this is going to be a successful holiday shopping season for retailers of all sizes.
I saw one figure, I believe it was one of your studies or one that you had commissioned, indicating that people on average may spend as much as $400 more. Where are they going to get that money?
Well, you know, there's lots of green shoots in the economy. Certainly growth has been sluggish and unemployment is too high. But this year the stock market is up. Real estate prices are back up again. So there's plenty of reasons to be cautiously optimistic. And we know that consumers do like to shop and spend in the holiday season. What we're calling out, though, is to ask consumers to think about allocating some of their shopping holiday budget for small businesses. And in fact, tomorrow is Small Business Saturday. For the 4th time in a row, American Express is really pleased to be the founding sponsor of a movement to get Americans to think about shopping small, particularly tomorrow.
Yeah, I think that's a very interesting and laudable initiative that you guys have gotten behind. What is the traction that you're seeing as a result of that? I live in a nice small town in New Jersey. I love to go into my local shops and shop local.
You know, it's undeniable how important small businesses are to the U.S. economy. 28 million small businesses exist in the U.S. today. Half of private sector employment is contributed to by small businesses. And if you go back 20 years, 2/3 of all job creation has been done by small businesses. But sometimes they can get lost in the holiday shuffle. So, you know, there's always been Black Friday for the big retailers and Cyber Monday for the .coms. But starting in 2010, we created this event called Small Business Saturday. That's now far bigger than American Express. We have a coalition of over 100 companies, 1,500 communities around the U.S. where people are committed to shopping small. Last year, over 1 million Americans shopped small and spent about $5.5 billion at small, locally owned merchants around the U.S. And we're thinking tomorrow is going to be even bigger.
Well, let me broaden out the conversation, if I might, Mr. Gilligan, just a little bit, and get you to talk about American Express's business more broadly.
Okay.
What segments of the business are performing particularly well this year, and which would you like to see perform even better? Where do you need to do some work?
Well, you know, we're really pleased with the progress and momentum that we have. In the 3rd quarter, spending on American Express cards around the world was growing at 8%. And in the 3rd quarter, we saw every region of the world, from U.S. to Asia to Latin America, to Europe, all tick upwards a bit. So we feel like we're doing a good job of executing our growth strategy and outgrowing our competition. And it comes from having strong value propositions in our card products for consumers, small businesses, corporations, from signing more merchants to accept the card, by having new partners around the world that help us grow our business, and through a lot of digital innovation that we're doing.
Mr. Gilligan, thank you very much. And I have to say that every time I spend something on my American Express card, miraculously, you guys get it right. I get billed for it. Way to go.
Thank you very much, Tyler.
Mr. Gilligan, thank you very much. Ed Gilligan is the president at American Express. Wish they'd screw up every now and then, but they just don't. All right, so we've seen how strong sales have been at some popular retailers, but how have some of those companies performed for their investors? It turns out the results have been pretty good. Dominic Chu has more.
Retail stocks become a focus for many investors simply because everyone is out shopping. Between Black Friday and the end of the year over the last 3 years, the S&P 500 consumer discretionary stocks have returned an average of nearly 4% each season. One area in particular has produced outsized returns, and it's all about the bling. Stocks tied to the world of jewelry have been sparkling and shining. Take a look at online jeweler Blue Nile. Over the past 3 years, between Black Friday and year-end, the stock has been up around 16% each time. Then there's the bricks and mortar side of the jewelry business. Zales is up nearly 19% each season. And for all you watch fans out there, it's Movado, which is up an average of over 19% each of the last 3 seasons. Some market optimists think consumer spending will continue to help power retail stocks into the year-end.
The early indications are we're going to have a very good holiday season. The stocks have moved up over the past year, along with a lot of other stocks, very reasonably valued. I think the surprises for both the consumer and for the stocks will be to the upside.
While many retail stocks do well during the holiday shopping season, there are no sure things. As with each holiday season, the heavy discounting could have an adverse effect on profit margins. And while that is a concern, some experts believe retail companies are well prepared.
I think there's different tranches of deals that companies are going towards in order to protect their margins.
So, now that Black Friday is just about over, sit back, relax, and take a look at your investment portfolio. You might find some great deals out there. For Nightly Business Report, I'm Dominic Chu.
And coming up, our market monitor says dividend plays will be back in favor next year, and he'll tell us why. But first, the best and worst this month on the Dow and the S&P 500. Archer Daniel Midland's proposed $3 billion bid to take over the Grain Corp was blocked by Australia, and that is where we begin tonight's market focus. The American food giant already owns a 20% stake in Australia's Grain Corp, but it offered to buy out the whole company last year. Australia's treasurer, though, blocked the proposal over concerns the merger would reduce competition and hurt growers. That sent shares of ADM tumbling down nearly 3% to $40.30. ExxonMobil has agreed to sell a quarter of its stake in an Iraqi oil project to PetroChina. The project is expected to rival some of the world's biggest sources of oil. It's one of several large fields that Western companies agreed to help Iraq develop in 2010. A lot of Chinese oil companies, like PetroChina, have been shopping overseas to expand their production. Shares of Exxon off just a fraction, though, at $93.49. Shares of eBay and Amazon popped after a survey showed Cyber Monday may be very promising this time around. The Nielsen poll found that 85% of participants plan to skip Black Friday, and nearly half will shop online during the Internet's discount offer day. Cyber Monday, that is a 30% boost from just last year. eBay rose more than 2.5% to $50.66, while Amazon rose almost 2% to $393.73. And investors bought up shares of Vertex Pharmaceuticals today after analysts put out some positive research on the drug maker. The report from Analysts Corner noted Vertex's recent sale of the rights to a hepatitis C drug to Janssen Pharmaceuticals, the stock up $1 to $69.38. Our market monitor this week says the market will continue its record run higher, adding another 5 to 7% on both the Dow and the S&P 500 from here. He's Jim Lowell, Chief Investment Officer at Advisor Investments. Mr. Lowell, welcome. Make your case for why you see stocks going higher even after such a big run-up in 2013.
Well, before I make that case, let me just say that after heapings of gains this year, I wouldn't be surprised to see the market take an immediate diet of 5% or so. But the reality is there's no negative news, no negative data either in terms of earnings or economic reports that we're seeing, especially here in our consumer-driven economy, that has us thinking that somehow this market's going to be significantly derailed over the next month, quarter, really throughout next year. We see the possibility of gaining ground, albeit with some slips along the way.
There are still some Washington issues out there, Jim. Obviously, a new Fed chief. There's another debt ceiling debate. There's going to be another continuing resolution. Could those things cause the market to stumble, or in anything more than a temporary way?
I doubt it could be in anything more than a temporary way. We do have the Yellen safety net, which means stimulus remains the rule, not the exception. That's good news for the marketplace overall. That said, we know that Washington, D.C. has a nasty habit of throwing a monkey wrench into the financial engines. But the market's already had several object lessons about why it shouldn't price those missteps into itself.
You know, it's been a great year for NASDAQ. It's been a great year for the smaller stocks, the Russell 2000. But your picks are all large cap, sort of baseline kinds of companies, beginning with Ford. Why do you think these kinds of companies will outperform? And take us through your argument for Ford.
Well, I think overall we're a little bit nervous about the small and mid-cap names that have clearly led the charge this year in particular, and certainly momentum-oriented stocks are something that we're a little bit leery of. When you look at Ford, it's not just a pure play on its own numbers. It's certainly reasonably valued. It's got a good dividend yield, 2.35%, but it is up 30+% year to date. It's a play on the U.S. consumer and the housing recovery. Only an architect drives onto a construction site in a Prius, so we know that they're selling their trucks at fairly good clips, highly profitable to them here at home. But there's also a nice play for Ford globally, and in particular inside the Eurozone, which pretty much everyone has written off, especially from a car sales perspective. They've begun to see a turn towards the better there. They can clearly capitalize on it down the road.
All right, lightning round time. You got two more picks. One is Amazon. Explain why.
Well, I'm not going to bet against the U.S. consumer nor the global one. I get everything from kindling for my fireplace to Fiji water to my rare books from Amazon. So I think that trend continues. They also are continuing to innovate. They've done a beta test with Sunday sales. I expect we will see Amazon 24/7 being a net benefit, not just to a big box store, but also for small businesses that could put their products in their pipeline.
And speaking of big box stores, Home Depot is your third and final choice.
Can't swing a hammer these days without wanting to look over at Home Depot, or Lowe's for that matter. Home Depot yielding about 1.81%. Certainly seems to me to be a grower, not just now, but throughout next year. The reality is if you bought a new home, if you are looking to maybe upgrade your home to sell it in the spring selling season next year, or you've just moved into an apartment, chances are you're going to be going to Home Depot to get something to hang on the walls or build a wall with. Do
you have any disclosures about these three stocks that you mentioned?
Oh, they're certainly inside of some of the mutual funds and exchange-traded funds that we own for our clients at Advisor Investments, and so far I'm thankful that they are.
All right, Jim Lowell, thank you very much. Jim is Chief Investment Officer at Advisor Investments. Well, like retailers for shopping, 'tis the make or break season for nonprofit fundraising, and increasingly, campaigns are moving online to win support. Hampton Pearson takes a look now at how charities are using crowdfunding to raise money.
The nonprofit Warrior Canine Connection had an idea to breed and train service dogs to be paired with injured veterans. But like any startup, not a lot of money. Then co-founder Molly Morelli had a brainstorm. Why not a live puppy cam on the internet, in search of fellow pet lovers who might also want to help wounded warriors?
I launched my own little puppy cam, and shortly after that, a large foundation picked us up and started broadcasting it.
They got a $150,000 grant from the Annenberg Foundation and primetime exposure for their puppy cam on explore.org and its Dog Bless You website, a nirvana for dog owners with 24/7 streaming video and snapshots. For the Warrior Canine Connection, it was a lifeline. Having found their target audience online, it was a natural next step to focus on fundraising and their introduction to crowdfunding.
For small charities like the Warrior Canine Connection, crowdfunding levels the playing field in pursuit of the biggest crowd of donors of all, people on the internet.
In less than a year, the group raised more than $168,000 from 1,559 donors through campaigns using the CrowdRise platform, twice what was raised through traditional efforts.
Our organization is now pretty much nationally known, whereas prior to starting this, we were lucky to be known in our own town.
Crowdfunding sites like Fundly, Indiegogo, and CauseVox let nonprofits create their own fundraising sites at low cost. At $2.4 billion a year, crowdfunding is a small slice of the more than $300 billion in total charitable contributions, but one with the potential to increase giving from the 2% of GDP it's been for decades.
Crowdfunding is a great way for nonprofits to get younger donors involved at a small amount and show their results directly.
Even the established players are now in the crowdfunding game. The Salvation Army's online kettlebell ringing added $2 million last year, a drop in the bucket that totals $150 million in the traditional pot. For Nightly Business Report, I'm Hampton Pearson.
And to read more about crowdfunding for charity, head to our website, nbr.com. And up next, banks taking steps to educate their customers. But first, a look at how commodities, treasuries, and currencies fared today. Gold finishing with its worst November since 1978. Almost everyone agrees that America has a financial literacy deficit, but fewer agree how to address it. Now, more and more financial companies are trying, but they still spend more on brand awareness than they do on consumer education. Kayla Tausche has our story tonight.
Amid the bills and catalogs of familiar piece of mail, Citigroup, American Express, Discover, Chase, saying act now and be approved for this one-time credit card offer. Those letters and banks' commercials, billboards, stadium signs, and internet ads cost the industry $17 billion a year. A new study from the Consumer Financial Protection Bureau shows for every dollar spent on financial literacy, $25 is spent on banks' own brand, a staggering disparity in resources.
We need to promote informed financial decision-making.
Director Rich Cordray said this means, quote, the majority of information consumers receive about financial products comes from a company trying to sell them something. Cordray said they lack unbiased information as they're flooded with offers. The bulk of those offers, credit cards, nabbing 7 times more of a bank's advertising budget than mortgages, 20 times more than savings accounts.
And that's just awareness. That doesn't even count the pesky direct mail that the CFPB says cost the industry an additional $2.64 billion.
Slowly but surely, banks are taking the hint. Wells Fargo recently installed a financial education portal for consumers to find answers to frequently asked questions. JPMorgan Chase has a financial education library. Bank of America, which has the largest U.S. customer base, commissioned its own study where 78% of respondents said learning about personal finance is hard. Now, the bank's trying to make that a bit easier, setting up the first direct-to-consumer financial education platform. No mention of its own products, and digital educator Saul Khan of the renowned Khan Academy as a partner.
There's a healthy sense of skepticism.
The result? BetterMoneyHabits.com, where a video series walks through everything from adjustable rate mortgages to tax deductions and everyday lessons often forgotten. Small steps for an industry failing the grade on financial literacies, but consumers still have to do their homework. For Nightly Business Report, I'm Kayla Tausche.
It is rivalry weekend in college football, so that means millions of people will be glued to their TV sets. But as Jane Wells tells us, one legendary coach is hoping to change the way fans watch, using what's known as a second screen strategy.
Oh, they're going to run the pistol on them.
No one knows Oklahoma football.
Release the back out of the backfield.
No one loves Oklahoma football.
Billy Sims is in the house.
Like Barry Switzer. The legendary coach now has a plan to profit from Oklahoma football through a venture called Coach's Cabana.
Get it out, get it out, get it out, get it out. No! Actually, being in a setting like a reality show, being watching the game in my home with me, but it's interactive with an audience outside my home, which is really neat, and that's what the sponsors really like.
Coach's Cabana works like a second screen. You watch Oklahoma football on TV, you listen to Switzer's commentary online, and since he never actually shows you the game, he doesn't have to pay for the rights to it. So has the NCAA said anything to him about this?
I didn't even call him when I worked for him. You know what I mean? I know what the answer's going to be. No, no. I'd rather ask for forgiveness, Jane.
Last season, Switzer says his second screen coverage of the Cotton Bowl got 30,000 viewers and several thousand tweets. This season, Coach's Cabana has expanded to more teams with more coaches, and advertisers are starting to sign on.
I think I'll take a drink of Diet Coke. And you can tweet me and interact with me at the same time, and you can watch, don't have to watch someone on network television do the color who's never covered a kickoff or brought one back. Understand, girl? Tweet us anything.
The entire enterprise is a somewhat chaotic, rocky work in progress, but it's not costing very much. Switzer thinks with the right former coaches and the right rabid fan bases, his second screen experiment could expand to 30 schools. The only drawback?
I can't drink doing this at the ball game. I like to have a beer every once in a while.
Especially in his own home. For Nightly Business Report, I'm Jane Wells.
And that'll do it for Nightly Business Report for this evening. I'm Tyler Matheson. Susie Garrett will rejoin us Monday. Meantime, have a great weekend, everybody.
Nightly Business Report has been brought to you in part by
TheStreet.com, up-to-the-minute stock market news and in-depth analysis. Our quant rating service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
I'm Tyler Matheson with a Nightly Business Report news brief. It may have been Black Friday at the malls, but on Wall Street, you could have called it Flat Friday. Trading was light, with the markets closing at 1 p.m. Eastern Time, and the major stock indexes ended the day mixed and basically little changed. But Wall Street wraps up an historic month of November with 12 record-high closings for the Dow, and those blue-chip Dow stocks, along with the S&P 500, finished this month with their 8th straight week of gains. That's the longest winning streak for the S&P in nearly a decade. Here's a look at today's closing numbers. The Dow 11 points lower. Technology stocks did help the Nasdaq gain 15 points, landing back solidly above the 4,000 mark, and the S&P was down about 1. And tune in to Nightly Business Report here on your public television station.